Hello, hello. Good afternoon, IG. Good afternoon, Facebook. Let's get this camera right. All right. How you guys doing out there today? How you good people doing? Let me get straight in this camera. All right. So Elaine Proby here, CEO PROBY'S Tax and Accounting. Want to welcome you guys on here today. Once again, we're going to be talking about some business and tax deduction. Important info. Hi, Kaya Matthews. Thanks for jumping on. So happy to see you, girl. All right. So today we're going to talk about 5 ways that small business can save on their taxes, reduce your bottom line, reduce your taxable income. And of course, what the whole idea is for you to keep more of your hard-earned dollars. You don't want to work so hard for this money and then give it all away in taxes, right? Hi, Klaus for Pop. Hi, Mighty Dre. Thanks for jumping on. So you don't want to work hard for this money and then wind up at the end of the year, you just give it all away in taxes. So today we want to talk about making sure that there's 5 ways that you can save on your bottom line. You can reduce your taxable income as a small business owner, and of course, have more money for you to invest, for you to build more wealth, and for you to have in your pocket, right? How you Lena Alamo? Thanks for jumping on. All right, let's just jump right into this, guys. We're going to talk about one of the ways that a lot of people take advantage of is employing family members. I know you guys hear about this a lot. Everybody's talking about employer kids, you have business employee family members. And one of the reasons for that, and I know a lot of us don't understand what it is. One, they have to have a viable position in the business, right? They have to work. You can't just pay them just because you want to pay them and write it off. So they have to have a viable reason to be working in the business, so they have a job. And so the way you save on taxes, guys, what you do is the salary that you pay your family member, let's say you have a child under 16 working, the monies that you pay them, you get to deduct. You get to deduct it as an expense, right? So you get to deduct as an expense. So, I mean, there's no more allowance. You let them work for it, so you can write it off. And then, of course, you don't have to pay unemployment taxes on them. So this is another way you're going to save. You don't have to pay unemployment taxes. In some cases, you don't have to pay Social Security taxes or Medicare taxes. Let's say if you hire your spouse. So this is very good, guys, because it's a lot of monies that you get to deduct off the top. You deduct everything you pay them, and then you don't have to pay any federal employment taxes on them, and you don't have to pay Social Security taxes or Medicare taxes on a spouse. All right, so let me just go over that briefly one more time. A lot of times, like I said, you get to hire a family member. You know, your kids, you give them allowances, they're in college or whatever, make them work, deduct that money as an expense, right? Then you save on the federal unemployment taxes, which you don't have to pay for the salary that you pay them. And then if it's a spouse, you don't have to pay the Medicare and Social Security taxes, which is about 15.3% of what it is that you pay them. So that's a lot of savings. So that's the first way, guys, that you could really cut back on your bottom line and save more money, keep more money in your pocket. Okay, so that is employing a family member. Second point today, start a retirement plan. Now, this is a great deduction, guys. Great deduction, setting aside money so that you can have it in the future. And when you pull it out, you get a deduction now. When you pull it out, you pay the taxes at that point in time, right? So this is how this works, all right? So what happens is you can set up, let's say you set up a 401k plan for your employees, and you can make a contribution to that plan. So you can match whatever the employee set aside. So this works great for the employees, and it works great for you as a business owner, because what it is they set aside pre-tax dollars, right? So they don't have to pay taxes on the money they make now. You match the contribution and you get to deduct it. So you're saving on taxes, right? So you save on taxes. You get to deduct the contribution that you make for the employee, which is a part of their, let's say their whole salary package, right? So this is money you're paying out anyway. So you get to deduct the contribution that you match. So that will reduce your bottom line. Your employee gets to set aside that pre-tax dollars, and that will also help them to pay taxes on less of the monies that they actually are making. So this helps you both ways. It gives your employees something to look forward to, save them on taxes, and it saves you on taxes as the employee, as the business owner. So this is another great way, guys, as a business owner that you can save on your bottom line, okay? So that's the second point I want to make today. And the self-employment tax, which is the SEP, you can set aside a lot of money, guys. If you're self-employed and you set up a SEP plan, which is a retirement plan, and you can set aside up to 30% of what you make and deduct it from your taxes and don't pay any taxes on it now. So when you pull this money later on, let's say your tax bracket is lower, you save taxes at that time, but you don't pay the taxes on the money you make now. Okay, so you set up the retirement plan, put the money in there, save on the taxes now, and then later on when your tax bracket is lower, that's when you pull it out and that's when you pay taxes. Okay, so it just takes a lot of planning, guys. And so I want you to make note of these 3 points, these 5 points that we're talking about today, and then what it is that we can go back over them. And if you guys need any assistance with it, of course, PROBY'S Tax and Accounting is here to help you with that. Okay. So hi, Taz Nash, thanks for jumping on. Hi, Laverne, thanks for jumping on. Yes, good to see you guys. All right. Tamazira, thank you for jumping on. Cognac, good to see you. Okay, guys. So that's 2 points I want to make today. And let's get into the third point, the healthcare. Now, this is something that I think a lot of you guys, the employees who are working at these jobs, who's offering this healthcare, which is the HSA, the healthcare plan, and as an employer, it will help your bottom line because, again, you can contribute to the healthcare plan. It's called an HSA, right? It's a health savings account. This is really great. What it does is it set this money aside. You get to deduct it as an employer. And what happened is the money gets set aside, you don't pay taxes on it, right? It grows. If it is increasing because it's being invested, it grows. You don't pay taxes on any of the money, the interest or whatever it gains. You don't pay taxes on that either. And then when you pull it out to pay for healthcare or benefit, guess what? You don't pay taxes on it again. So this is like a triple effect, right? A health care savings account, guys, HSA. If you're an employee and you work somewhere and they have one of these benefits, take advantage of it. And as an employer, you can set up one of these benefits for employees, and it helps in 3 ways. The employee doesn't pay taxes on that money that's set up as pre-tax. You get to make that deduction as an employer. And then when you pay no taxes on it. And again, because you set aside money, you get interest in dividends, and the other you don't. This is great. Again, guys, we're talking about 5. The business can save. Onto the 4th point. The 4th point today, number 4. Business structure. I know we always talk about business structure, and business structure is one of the most important thing in the way you run your business, because the way you set your business up, the way the structure is, will determine the taxes that you pay and how much taxes you pay. So if you're not operating in the right business structure, you could be paying a lot more taxes than you need to. So if you start an individual business, say you have a home-based business, you're self-employed, and you are running as a now your taxes if you change your business structure. Let's see. So what we'll do is, if you create an LLC or an inspiration structure, what it does you on a K1. And now we're talking, if you are out, every money that you make on your Schedule C on your personal taxes, you pay Social Security and all of that. If your property is $50,000 on your Schedule C, you'll pay Social Security tax for $50,000, right? And that's like 15.3% Social Security taxes. Now, let me explain. If you have a different business on Facebook, guys. Here we are. All right, we're back on Facebook. So if you pay yourself a reasonable salary, you don't have to pay Social Security taxes on the profit from your business. So let me go over that again, because this is tip number 4. This is some good stuff right here. If you pay yourself a reasonable salary and you're operating in a business structure like an LLC or an S corp, pay yourself a reasonable salary, whatever that amount is, $2,000, $3,000 a month, $5,000 a month, whatever that is. What happens is the profit that comes to you on your personal taxes on the K-1, the profit that comes to you, you don't have to pay Social Security taxes on it. That's 15.3% taxes you don't have to pay on that profit, because you already paid for it on your salary that you take. So again, just to recap, I know it sounds a little complicated. If you are a sole proprietor, you pay Social Security taxes and Medicare taxes on all of your profit on your Schedule C on your personal. If your structure, your business structure, is either an LLC or an S corp, where you get a K-1 for your profits, but because you pay yourself a salary, you won't have to pay Social Security taxes and Medicare taxes on the entire profit. You can skip the Social Security. You already paid it on your salary, and you save a lot of tax. This is one of the greatest tax saving, guys. And again, call us here at PROBY'S Tax and Accounting. We can assist you with this. We can simplify this a little bit better for you. And we can make sure that, of course, you're operating in the right business structure. Okay, so very important, very important. So it's okay to be a sole proprietor, but hey, there's a lot more tax advantage when you're operating from a different business structure. And we're here to assist you with that. Okay, so let's move on to the 5th point that I want to make today, guys. And this is going to be real good stuff. 5th point I want to make today is you can deduct travel expenses, right? 100% of your travel expenses is deductible. As a business owner, you go on a business trip, you deduct 100% of it, your flight or your, the car expenses, the lodging, transportation, meals, 100% is deductible, right? So, but here is the fun part. If you go on a personal trip, right? And you have a business purpose while on this personal trip, you can deduct some of that personal expense as a business expense as well. And this is a lot of times you're not thinking about this, right? Depending on what you're in, if you're an entertainer, or if you're a real estate agent, if you're an insurance agent, if you are, whatever business you're in, and you go on a personal trip and there's a business purpose while you're there. While you're there, you're looking for property, real estate, you're selling insurance, you're an entertainer, you're getting involved with, you're getting involved with networking, you're going to events, you're doing all the stuff, things that are relative to your business. Because you are on a personal trip and you're doing some business related ventures while you're on this personal trip, you can take a percentage of that personal trip and write it off as a business expense. I love this one. This is great because I'm sure there's always a business reason that when you're on a personal trip, you can find a business reason, and you guys can write off a percentage of that personal trip as a travel expense deduction. Okay, so that is really great, guys. I want to go back over these 5 points today that will reduce your bottom line as in your business. And again, it will benefit you, it will benefit your employees as well. And of course, it is a win-win situation. Okay, so let's go back over those 5 points, 5 ways to reduce your taxable income. And first way is employer family member. This is a great one. Everybody loved it. No more allowance, kids. You guys have to work for your pay so we can write it off. Okay. All right. So that's the first point. And then the second point is set up a retirement plan. Set up a retirement plan. That money sets aside later. You save on the taxes. You don't have to pay taxes on your profit. No, you get to write it off. And so that will help you on the later watch. The third thing is the health care plan that you set up, which is the health savings account. This is really great, guys. Take advantage of this. If you're on a job where they do this, employer, you set one of these up. It will be very helpful. You can save in your bottom line. The fourth one is the business structure. Very important. Business structure, guys. You need to visit that every single year, or, maybe even in the middle every quarter. Visit your business structure. Make sure you're operating the right way. And then, of course, the last one is the business travel. So you can take some personal travel, and then you can find business purposes, and you can get to write off some of those expenses, right? So I really love it. So everything you do does not have to always just be 100% business. Some of it could be personal and you get to write it off, right? So those are my 5 tips today, guys, so you can reduce your bottom line. The whole idea here is for you to get your business up and running, for you to be able to save. You know, you don't want to spend all of your time creating this business, making a lot of money, and then at the end, all you do is pay taxes. Give it all away in taxes. This is what we don't want to do. The idea is for you to create wealth. The idea is for you to keep more money in your pocket. And this is why we're here, PROBY'S Tax and Accounting, to assist you to make sure that that happens, right? Because we want to see you grow. We want to see your business succeed. And we want to make sure that you have more money in your pocket so you can continue to build wealth and have more money to invest and create more revenue for yourself, all right? So those are my 5 points today, guys. Elaine Proby here, CEO of PROBY'S Tax and Accounting. We not only provide you with tax services, but we do accounting services. We have payroll. We have a full-fledged financial service business, small business. We can set up your corporation, any of your entity, any problems that you may have. We're here to consult with you to make sure that you're doing that right. And of course, mention you coming. Hi, Carla. And of course, the whole idea here is to teach you. We're here to teach you how to be successful in whatever your undertakings are. Okay. Again, PROBY'S Tax and Accounting. You can call us at 323-290-9034, guys, or go to our website at probydstax.com. And we have virtual tax services. You can upload your information to our website. Everything is done virtually. You don't even have to come in the office. It's done in the comfort of your own home. So we're here to help you with that. Okay. All right. So with that said, hi, Elena. Hi, Tad. You guys have a question? I want you guys to come back here on Thursday afternoon when we're going to be discussing the different type of taxes. Thursday afternoon, the different type of taxes we'll be talking about. And at 1 p.m. Thursday, you come right back here, you guys. I want y'all to hit like and share this video, and then turn on your notification. Turn on your notification so you can know when we go live. Make sure that you share this video with friends and family. Subscribe to our YouTube channel. We really do appreciate it. And we want to continue to build, continue to grow the community, and continue to educate you guys on your personal finances. All right. Hi, Diamond Cole. How are you? Hey, Jamie. Thanks for jumping on. All right. Appreciate you guys for popping in. With that said, guys, Elaine Proby here, CEO of PROBY'S Tax and Accounting. I'm out of here today, and I want you guys to listen to instructions so we can get out of COVID. We can get on the other side of this, great. And so I want you guys to, once again, you guys can take care of each other and take care of yourself. And I will see you guys back here on Thursday, okay? Have a wonderful day.